Well, this situation is horrible. If you don't know what I'm talking about the fact that the stock market is nothing but an absolute bloodbath. Trillions of dollars are just disappearing into the ether. I'm talking about legit stock market crash types of situations. That's what we're in right now. And with that type of a lead in, with that type of an intro, you might be surprised to find out that I bought the dip. I know that sounds crazy, but yes, today I did create a new bullish position. And before you just clown on me in the comments, watch this video because I do break down exactly why I decided to buy the dip and what I'm actually looking for in the market. I'm not just randomly firing from the hip on this one. So like I said, hey, if you want to clown on me on the comments, I get it, but first at least pay attention to why I did it, because depending on how this plays out, I might seem like a genius, or of course this might just be absurdly painful and I might lose a lot of money and I might be horrifically wrong. Of course, only time will tell. But before we get into all that, I'll also be breaking down the major stuff happening in the market right now. Of course, if you enjoy these type of market breakdowns, don't forget to like, subscribe, all that good stuff. With that being said, let's rock. I was not joking when I called the stock market an absolute bloodbath today, because take a look at the S&P 500 heat map. There's only a baby amount of green and a lot of red. And by the time you look into the numbers, it gets even worse. The Dow nosedives 1,600 points. S&P 500 and Nasdaq dropped the most since 2020 after Trump's tariff onslaught. It was brutal, and it wasn't just in the world of equities. The options market got absolutely hammered. We opened up, sold, then we had a little bit of a bounce, and then around 12:20 the market said and we just absolutely puked into close. And yes, this is the S&P 500, but it's even worse in the small cap sector. Small cap benchmark Russell 2000 becomes the first major US stock measure to enter a bear market, officially down in excess of 20% from the all-time high. And man, it was just brutal. The SPY dropping 4.9%, down about 12% on the year. You have the Nasdaq dropping 5.3%, and like I said, the Russell down 20% from the high, but right now down about 6.4% today. And of course, vol ripping. This is the only green thing on my watch list is volatility. Everything else is deeply red. And unless you've been living under a rock, you probably know why this all happened, but it relates to tariffs. Stocks suffered the biggest one-day wipeout in value since March of 2020, aka F your portfolio. This is all done because of what we just heard from Trump with relation to the trade war, tariff war, whatever you want to call it. But we got the update of what's going on with reciprocal tariffs, and it was way worse than anyone anticipated. Right here, as soon as we saw this board from the Rose Garden speech yesterday, right after the market closed on Wednesday, President Trump was at the Rose Garden speaking to everyone. It was Liberation Day, and at first things were fine, and we actually even got a report from the Wall Street Journal that the tariffs were only going to be 10%, and the market actually started going up on that. And then a couple minutes later, Trump broke out this board with this information, and everyone's jaw hit the ground. Tariffs charged to the US, including currency manipulation and trade barriers. I want you to remember that. That is their own calculation of what the tariffs are, including, once again, the currency manipulation and the trade barriers, saying that China is coming in at 67%, and then our reciprocal tariffs was basically this number divided by 2. So we're hitting China with a 34% tariff and the EU with a 20% tariff. And I want to make it clear, this is impacting all other 180 plus countries on this planet. Unsurprisingly, many countries are already clapping back. Canada slaps 25% on American cars. French companies warned off. China urges US to quote unquote immediately cancel reciprocal tariffs, vows countermeasures. I could find you a gazillion more examples of this, but this is exactly why the market is selling off, because tensions are not going down. In fact, they're boiling over, because now we're getting in this tit for tat response and no one knows where it's quite going to end. But what I find interesting on all of this is the actual calculation of how we got to where we are. How did we get these numbers? Because this entire time we were being pitched this concept of, hey, if other countries are tariffing the US is going to tariff them back. It's going to be an eye for eye. It's going to be a one for one. And okay, I think that was reasonable. I think a lot of people understood that. Maybe in the short term, there's going to be a bit of pain, but hey, that's what fair trade is. And then we got these numbers and everyone's like, where are you getting them from? We get that you're including tariffs, currency manipulation, and trade barriers, but where are you getting getting 67%? Where are you getting 39%? Where are you getting Vietnam at 90%? Where in the world are these coming from, to the point that was the major trending news? How did the US arrive at its tariff figures? It's a very, very fair question, and we got the answer to it, and this is the most wild thing in the entire situation. This is the formula Trump's team used to calculate tariffs. The Trump administration calculated new tariffs based on existing trade balances, dividing a country's total surplus with the US by its total exports and then dividing that by 2. Once again, just for the people in the back, when calculating these tariff numbers, it had nothing to do with existing tariffs, currency manipulation, or trade barriers, the things that we were all told that's what the tariffs are going to be based on. Instead, it was really just the trade surplus. It was dividing a country's trade surplus with the US by its total exports, then dividing it by 2. Once again, it had nothing to do with tariffs, currency manipulation, or trade barriers. It had to do with just the amount of trade, the trade surplus between us and whatever other country was in question. Now, as you could already tell from how deeply red the market was, this caught everyone off guard, and it is absolutely absurd. I guess I should take a moment to clarify here that I do believe in the long run the US is going to win from this, and even Bill Ackman was tweeting out, sometimes the best way to win a negotiation is to be the crazy person. And I guess if that's the goal of the Trump administration, congrats, they did it, because this is absolutely crazy. So in the short term, there's clearly a lot of pain. As I alluded to, trillions of dollars of value have been erased, but I do believe it's so absurd that it's going to force the other countries to come to the table. More manufacturing is going to come back to the US. So I do think it's going to come back better and stronger than it's ever been, but I think it might take a while. I'm talking multiple quarters, potentially multiple years for this to really pay out. But man, in the short term, is it absolutely painful. Looking at the overall market, the S&P 500, we dropped 4.8% today. Remember, a circuit breaker halt comes in at 7%, so we weren't that close, but we also weren't that far away. Clearly, this is the lowest value of the year, and we've now officially, let me get you these exact numbers, we've officially fallen, yes, about 12% from the all-time high, so we're clearly in a correction territory and about 8% away from an official bear market. So with all that being said, you might be remembering the start of this video where I said I bought the dip. I want to make it very, very clear. Maybe am I biased? Maybe, because coming into this, I was swinging calls and I was hoping that Trump said something good. So maybe I'm just doubling down on a bad position. I recognize that in myself, and now the position's getting a little bit sizable. That's totally possible. And depending on how this plays out, like I said, I might be a genius if I'm right and this is the bottom, or I might seem like a complete schmuck if I'm wrong, but at least give me the reasoning. Now, I do admit it, maybe I'm a little bit biased, but let's go into the actual numbers, the measurable things of maybe why this isn't the worst time to get a little bit of a bullish position. Shout out to public.com for sponsoring this portion of the video. Now, if you haven't already, I highly suggest that you check out Public because it's my favorite place to trade options. Public helps you make more money or lose less on all of your option trades with their options rebate. When you buy or sell a contract, you get a rebate, which means you actually pay less and in reality, make more than you would on other platforms. You can receive a rebate between 6 and 18 cents depending on your current and prior month's options trading volume. This means that Public is the most cost-effective way to trade options, which is why I love it, because it allows me to focus on actually trading rather than the headache that is trading fees. Now, beyond rebates, Public.com offers you an entire suite of tools. They have a comprehensive strategy builder to plan single or even multi-leg strategies. They have interactive P&L charts to help visualize the outcome of trades, and Public even has advanced charting with hundreds of built-in technical analysis indicators. With all these offerings, no commission fees, and no per contract fees, I'm confident that you'll love Public.com as much as I do. So don't forget to check them out by going to public.com/Matt Kohrs, or you can click on the link in the description of the video. Thanks again to Public for partnering with us, the Goonie community. So let me start this off with, first of all, seasonality. Next week, the second week of April, over the past 5 years, next week is the fourth, potentially fifth, but about the fourth most bullish week of the entire year. This is next week. So I know we have to get through tomorrow and there is some crazy stuff going on tomorrow, but I'm just letting you know, next week, from a seasonal perspective, the bulls dominated. Now I get it, seasonality isn't the end all be all, but you might want to consider it because seasonality does either offer tailwinds or headwinds depending on the direction of your position. And also it's important to follow. There's a reason we have the saying, in the market, history doesn't repeat, but it often rhymes. And it looks like there's there's a little bit of a bullish tune, if you will, being whistled next week. So like, I get it, not the end all be all, but I wanted to point that out. I also wanted to point out from a technical perspective, we are at major support. This is the exact dip of early September of 2024, and then also roughly late July of 2024. So, and also it's where we gapped up and found support in mid-June. So this level, 5,400 on SPX, support. Okay, maybe it is support. Maybe this is just a dip buy at support. If we bounce off of it, once again, a lot of trades are graded on how they perform and not really the decision making involved in it. And maybe it seems smart, maybe it seems dumb, but we have bullish seasonality, we have major support from a technical perspective, and then from an options perspective, we're coming up on a lot of positive gamma right here. All of that purple, that deep purple, is positive gamma, aka support. So we have technical support from price action, we have option support from real-time gamma measurements, and then we also just have bullish seasonality starting next week. And remember, overall, April is a very bullish month. So that's my reasoning. Obviously, now knowing that, if you want to dunk on me on the comments, feel free. We're going to see who's right, if this ends up popping from here or if we have a continuation. But I also should clarify, I'm not calling for it to bounce tomorrow. I'm calling for this to be a pretty good dip buy in the next couple weeks, in the next couple months. So I should also fairly give you a little bit of my time frame on this. But here, I mean, your options are not to really chase it down. It's silly to go short at support from a technical, from an options, and also from a bullish seasonality. You don't want to go against that trend. So it's either you're playing this bounce or you're sitting on your hands. And granted, maybe the best option was to just sit on my hands. I completely concede that. And like I said, maybe I am a bit biased in wanting this to bounce, but I don't think that I'm just completely firing from the hip. I think we're looking at legitimate reasons why this might be the terminal point of this downside sell-off. So with that in mind, please understand, I'm not calling for it to happen tomorrow. If it does happen tomorrow, that's completely awesome, but this is going to be a multi-week, multi-month type of a call out. But I should let you know, with respect to tomorrow, we might get big movement because early in the morning, 8:30, an hour before the market opens, we're going to be getting the unemployment report. And then also around 11:25, the chairman of the Fed, aka Daddy Powell, Fed Chair Powell, will be speaking. So obviously we're going to be streaming that, and we're also going to be streaming the unemployment report. So check that out. So definitely be prepared for some serious ranges. That's what I have for now. I appreciate the good vibes. I appreciate you stopping by. I appreciate your time. I'll catch you in the next one. I'll catch you in the stream. I'll catch you when I do. But with that being said,